You will not need another mentorship after using this strategy because I'm going to give you the easiest model in all of trading. It's simple, there's no complicated daily bias, there's no strange indicators, and you don't even need liquidity. All you need is a fair value gap. I've made this as simple as I possibly can, and if that wasn't good enough, you're going to get the completely full free PDF to this trading strategy in the pinned comment down below. Okay, so for this strategy, all we need is a fair value gap, and if you don't know what that is, go look at a picture on screen now of what a fair value gap is. It's a very simple pattern that forms in price action, and what you're going to do for this trading strategy is you're going to mark out the most recent fair value gap in price action. Now, this tells us a lot, and we're always going to do this on the 4-hour chart, right? So we always use the 4-hour chart as our higher time frame, and then we look for our entries on the lower time frame. And this is the simplest way of determining daily bias. It's just simply get on the 4-hour chart and mark out the most recent fair value gap in price action, which is this big fair value gap right here, the gap between this candle here and this candle here, right? That's your fair value gap. You're going to do that on the 4-hour chart for whatever market you trade. In this example, it's the Australian dollar against the US dollar. If you trade gold, S&P, crypto, whatever you trade, NASDAQ, this will work, right? So you mark out the most recent fair value gap on the 4-hour chart. And really all we want to see is we want to see what price does once it hits this 4-hour fair value gap, right? And there's really 3 things that price can do. Number 1, price can just smash right through the fair value gap. And if it does that, it is what it is. Number 2, price can hit the fair value gap and just chop around for ages, right? Which you can also do. And number 3, and this is what we actually want to see, right? Because remember, this is a bullish fair value gap. Imagine this is like the 15-minute or 5-minute chart. Price can hit this 4-hour fair value gap on, let's say, the 5-minute chart, and then instantly shoot off, and ideally give us a retracement, and then right price off, right? That's what we want to see. But the reality is, this 4-hour fair value gap basically tells you everything you need to know about daily bias and what price is going to do in the next few hours, right? As day traders and scalpers, that's all we need is to know what price is likely to do in the next few hours. We don't have to know what price is going to do for the next month, just for the next few hours, right? And of course, we trade in that direction. So you mark out the 4-hour fair value gap on whatever market you trade, and then simply all you're going to do now is you're just going to wait for price to hit this 4-hour fair value gap on the lower time frames. And we want to see what price actually does. So what that really means is you can get onto any time frame that's less than the 4-hour chart. I know there's a guy using the 4-hour and 1-hour chart. Hey, if that works for you, by all means do it. For me, that's a bit too slow. You can use the 15-minute, which I highly recommend because the 4-hour and 15-minute chart are so easy. So easy. But for this example, I'm going to show you the 5-minute chart too, because a lot of people ask me, hey, Atif, can I use it on the 5-minute, 1-minute? You can use it on any time frame, right? But the 4-hour chart always stays the same, right? You always mark out the fair value gap on the 4-hour chart, and then you look on the lower time frame. So let's go on the 5-minute chart. And let's see what we can see. So here's the big 4-hour fair value gap that we just marked out. Now, do you know how I said we want to see price hit the 4-hour fair value gap? And we want to see what it actually does. We want to see it shoot off, give us a retracement, and then ride price off, right? We want to see, the key term here, the key word here. So we want to see confirmation that we're on the right side of the market, right? We're not going to buy randomly as soon as price hits this fair value gap, right? Because, do you know how I was saying right at the beginning, price could just smash right through it. It could consolidate, or it can actually, reverse and give us a bullish retracement entry. So there's 3 things that price can do. We do not gamble, we do not guess, we wait for confirmation that we're on the right side of the market. So price hits the 4-hour fair value gap right here. Now you might be wondering, oh Atif, does it hit it here? Yes it does, but look at the time right at the bottom. Can you see that? 4 p.m. right here, 4 p.m. Eastern. This needs to be at a key time of day, right? And there's 3 major sessions: London, Asia, New York. And obviously indices open if you trade indices, right? So this is not a key time of day, so we do not look for any of our entries. And you can just tell, right? I mean, just look at this price action. This is not a key time of day. However, this right here is Asia, which is really 8 p.m. Eastern. And you can see, I mean, look at this, 8 p.m. Eastern right here. This candlestick instantly goes straight into the 4-hour fair value gap. Now, like I said before, we're not just going to randomly start buying here and put our stop. I remember when I was learning how to trade, people would say, oh, if you put your stop 5 pips away or 4 pips away, I mean, you might just get away with it here, but with spread, probably not. They had all these weird analogies, 3 pips, 60% of the time, price does not go, less than 3 pips, into a fair value gap or whatever. Ignore all of that. You want to actually see confirmation, right, that you're on the right side of the market. So price hits the fair value gap. Remember, this is a bullish fair value gap on the 4-hour chart that we talked about. So we do not care about this bearish fair value gap, right? This is manipulation. There is no interest from us whatsoever. This is smart money forcing price into this 4-hour fair value gap. But what we do care about is we want to see what price does once it hits the 4-hour fair value gap. And we can see, I mean, look at this, right? Price wicks into it, instantly starts shooting off. It literally gaps. This is a volume imbalance for those who don't know. What that really means is that price is aggressively, really quickly trying to go away from where it actually is, and for lack of a better term, right? So price is aggressively moving off in the opposite direction. Guess what direction that is? Bullish, right? Same direction as this big 4-hour fair value gap. But again, you don't need to know that for this strategy. That's just me giving you a bit more analysis than you need. And all you really need to do for this strategy, and the way it's essentially coded into this model, because there's a lot more that goes on behind the scenes. It seems really easy, and it is really easy, but there's a lot more to it that goes on behind the scenes, which I'm not going to talk about because you don't need it. But the easiest way is just to mark out the new fair value gap that forms on the lower time frame. So this is the 4-hour fair value gap. Remember, a bullish 4-hour fair value gap. We do not care about this bearish one. We care about the first bullish fair value gap that forms on the lower time frames, and that's going to be our entry. Now you might be thinking, oh, Atif, doesn't it just wick through it? Yeah, absolutely fine. I mean, for your entry, you're going to be entering on the fair value gap, and you're going to put your stop always at this low here, because this candlestick formed the fair value gap. And again, I'll put the picture on the screen now of the fair value gap. Remember, it's 3 candles that form a fair value gap. When you're bearish, always put it at the high, minimum at the high, or the one that forms the fair value gap. And when you're bullish, always put it at the low of the 3 candlesticks, right? So always at this low here. And if there was like another swing low down here, like that, you don't have to put your stop all the way down here. You only have to put it, at this candlestick here. But again, it's up to you, right? At the end of the day, it's your money, not mine. So, and this is what I would do personally. And then for your take profit, you can just target 3 to 1. But let me just talk about the volume imbalance very quickly, because some of you might be wondering, oh, Atif, can I enter here instead on this nice little volume imbalance? Absolutely. And you can see what price does, go straight into it. You can absolutely enter on that. But for this strategy, and the one that I guess what it says in the PDF down below, I don't know if you downloaded it. If you haven't, go download it. You should be able to get instant access to it. If you put in your email and you don't get access to it for whatever reason, it's because you probably signed up for it like months ago. Like I was speaking to like the email team, like it's because you signed up for it months ago. So search on your inbox, like Atif trading plan or something, and you'll find it, right? So, some people ask me, hey, Atif, I put my email in and I didn't receive it. It's because you've already received it a while back. So just type into, I guess, Gmail or whatever email provider you have, like trading model or welcome or whatever, and you'll find it. But for the rest of you, just download the PDF, and you'll see in the PDF, the only entry you need is a fair value gap, right? So again, this is just me just talking about the volume imbalance, but it is what it is. For your take profit, liquidity is always the highest probability setup in all of trading, but this is where you can add liquidity, right? You don't need a sweep, not for this strategy, but if you're like, okay, so where do I put my take profit? And if you've been watching this video for any length of time, I love an easy 3 to 1, no guesswork. I know exactly where my take profit's going to be. I know where my stop loss is going to be. I know where my entry is going to be every time. For me, that works. For you, you might want to target previous sessions high or whatever. Here's previous day's liquidity. Let me mark this out for you. Previous day's liquidity, easy peasy target. And like that, right? It's all you need. 4-hour fair value gap, lower time frame confirmation, and entry. I was not lying when I said you will not need another mentorship after this video. It's the simplest trading you can get. And you might wonder, oh, Atif, this is so good. Why are you giving it away for free? I'll be honest, I don't want to be teaching trading forever. I want to teach other things like investing. I want to help more people, right? I'm being genuine here. Like, this trading strategy works. Go back test it. Do not ask me, hey, Atif, what's the win rate in GBP CAD? Like, come on, bro. Like, you go back test it. You need the confidence. You need the experience. Back test it. Use it. And make sure you download it down below.